Hey everyone, welcome back to the podcast. Today we are diving into something that is kind of wild. The worlds of sports betting and stock trading are getting really close together.
Yeah, it's crazy when you think about it, and the thing connecting them is these products called event contracts. Basically a yes or no bet on something happening bandy.
So like you could pick who wins a football game, or if gold closes above $3,500 an ounce tomorrow.
Exactly, and it works in this gray area where it is not really gambling, but also not really investing, and that is where all the legal questions come in.
So who actually regulates these event contracts?
The Commodities Futures Trading Commission, the CFTC, handles them. But normal wagers are regulated by state gaming commissions, and traditional investing falls under the Securities and Exchange Commission, or SEC.
Oh wow, so different rules depending on how you classify it, and I heard major leagues like the NBA are worried about integrity risks.
Yeah, in a May letter to acting CFTC head Caroline Pham, the NBA said these prediction markets could be riskier than regulated sports gambling because it might influence how people approach games, even professionals.
And companies are already fighting over this legally, right?
Right. When Robinhood announced its rollout of event contracts for college and pro football, they sued Nevada and New Jersey for trying to block them, saying it would interfere with the CFTC's authority and create a fragmented market.
Okay, so from a business perspective, why is this so appealing?
Well, 2/3 of Robinhood users also use platforms like FanDuel and DraftKings, so merging sports and trading in one place gives a huge cross-sell opportunity, and analysts say early movers could capture a massive total addressable market.
And Robinhood is not even the first, right? Crypto.com started this back in December 2024.
Exactly, and Robinhood had also tested sports contracts during the Super Bowl in February, but the CFTC told them to stop after a day. So this is a space that evolves super fast.
So the companies are trying to make Robinhood a one-stop shop for trading, investing, and now sports prediction.
Yeah, they said it is a no-brainer to add football to their prediction markets hub, and the goal is to allow anyone to trade or hold any financial asset through Robinhood.
But what about consumer protection and market integrity, especially with unclear guidance from the CFTC?
Those are the big questions. Joel Simpkins from XST Capital said that more competition benefits consumers by lowering spreads and offering better pricing, especially as online sportsbooks and prediction markets grow.
So a bigger, deeper market could be fairer and cheaper, but it sounds like there are still risks if people confuse fandom with investment.
Exactly. Joel Simpkins warned that someone might take the Jets to win just because they are a fan and think it is a sound investment, which is not something Warren Buffett would recommend.
So what does this mean for the future? Do you think event contracts will keep expanding?
Yeah, the market is evolving rapidly, and by next NFL season it could look completely different. Companies are experimenting, and the challenge will be balancing innovation with consumer protection.
Right, so listeners, this is a market to watch, blending finance and sports in ways we have never seen before.
Absolutely. It is fascinating, but also a reminder to be careful and understand what you are really trading or betting on.